Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, yesterday the Canadian Real Estate Association made headlines once again bragging that home prices nationally had increased 8.4% on average in November. How do you read those so-called stats?
Here's for your listeners. Home prices did not increase in November. That is a falsehood. Every single newspaper in Canada picked this up. Not only that, the Canadian government released a new fiscal update for the previous year. Included in that update, you won't believe this, Jim, are two charts created by the Canadian Real Estate Association. I mean, you can't make this stuff up. Home prices in Canada did not increase $1 year over year in November. If you believe that story, you are being misled with the same information home buyers have been misled with for decades. What happened in November? First of all is this. We are still collecting November transactional data from across Canada. I would honestly say right about now, we will be finished. What that means is that when each of these real estate boards reported their sales information to the Canadian Real Estate Association, they didn't have full counts of the last month. That's the first thing. The second thing is the Canadian Real Estate Association is aggregating data from 69 real estate boards across Canada. If one of those real estate boards, just one, I don't know, like let's say the Real Estate Board of Greater Vancouver, and let's say another one, the Fraser Valley Real Estate Board, who are aggregating their numbers through the British Columbia Real Estate Association. Send the Canadian Real Estate Association November numbers that are not comparable to November numbers, what they were measuring the year before. The Canadian Real Estate Association issues faulty housing data that is universally believed across this country. So I'll tell your listeners this, because I can give you this information because it's still not fully correct. In other words, we will be another week before we're fully assured that our data for November is correct. But if you look just at the information the Canadian Real Estate Association reported yesterday, if you look at just the Real Estate Board of Greater Vancouver and Fraser Valley, their share of the national average selling price increased 28% in November, year over year. What I mean to say is this. Last November, those two real estate boards with higher prices only accounted for $73,000 of the national average selling price. This November, because there was a few more sales, because housing prices have dropped and continue to drop and were reported as dropping by the British Columbia Real Estate Association in those two cities, or those two real estate boards. This November, they reported $94,000. They accounted for $94,000 in the national average selling price. In other words, there were no new homes built. The same number of homes exist this year in British Columbia as Ontario, with a couple of new builds thrown in. There's certainly the same number of homes in Quebec, in Alberta, and Saskatchewan, and Newfoundland. The only thing that was different was the home buyers themselves were more active in Vancouver and Fraser Valley because they were getting better deals on houses. It's like when you walk into your local clothing store and the salesman says, hey, it's BOGO today. You may not have been going to spend $100. Maybe you were only going to spend $75. But now you find out it's 2 for 1. So instead of spending $75, you spend $100. the average sale per customer has increased, while the price of the products they're buying are decreasing. That's exactly what happened in November. Housing prices did not increase 8.4%. More sales took place in Fraser Valley and Greater Vancouver Real Estate Board members because they were so slow the previous November. They're still slow this year, but I mean, they were 28% busier, the way that we measure a housing market. It inflated the national average selling price just by those two areas by $21,000. Just those two areas. Now, we could do the same thing across Canada to show you more than the entire 8.4% increase the Canadian Real Estate Association reported. Every news outlet in Canada reported. Every economist and realtor in Canada reported. The governments of every Canadian municipality, city, province, federal, reported. Bank of Canada, CMHC reported. They reported, as they have always reported, they're measuring home buyers, not the homes the buyers are buying. Average home prices across Canada, the price of the average Canadian home year over year in November was negative. It was a negative year over year change. You would know this if you went and had the vast majority of homes in Canada appraised year over year. You would find out your home is worth less on an appraisal. The entire area of Greater Vancouver are going to find all of their property prices have dropped when the new assessments come out. If the prices have dropped over the year, it is impossible for an appraisal to be done in November that said your home has gone up in value. What the Canadian public heard yesterday is the same nonsense that started in the mid-90s when the Canadian Real Estate Association first hired Greg Klump. You have a marketing report done to create commission earning. Nothing more, nothing less. That's why the Canadian Real Estate Association didn't warn everyone that prices, even though the average home buyer in the month of November was a wealthier home buyer than the average buyer who was buying a year ago in November of 2018, were buying more expensive homes because they were getting better discounts on those homes versus 2018 prices. The average price was solely caused by a shift in the composition of the sales mix. It's not our problem to have to go out there and debunk the Canadian Real Estate Association every month. We are paid to explain to people where the housing prices are going to go. The reason why we know where they're going to go is because we know how to measure home prices. We know that we're measuring buyers when we're reading reports in the newspaper. So we adjust our way of talking. It is just unbelievable that someone in Canada did not take a calculator and type in the number of sales that took place in Vancouver this year against the number of sales nationally. They didn't type in the number of sales in Fraser Valley last year and this year and compare them against the national number. We have said in this show, Jim, over and over again, the average selling price is a heat-seeking missile. It goes to the areas of the country. It goes right to them, where the houses are being traded at the most rapid rate. As the housing market cools, its share of the national average decreases. Not because the home prices decrease, but because the number of homes being purchased in the compositional mix decreases. Now, it happens nationally, but it also happens provincially. It happens municipally. It happens community-wise in your city. It happens within the categories of homes within the communities, within the city, within the region, within the province, within the nation. There's a reason we call it the multiplicity of sales effect. These are irrefutable comments that I'm making for you today, Jim. Irrefutable, meaning as I'm sitting here looking at the data before my very eyes, even the data released by the Canadian Real Estate Association, With a calculator, I can prove everything that I just said. There's a reason why there's not a lineup, a revolt of people running away saying that the story he's telling is not true. The reason is because you can't be wrong. It's impossible when you're reading the data, the story, the way that it's being told. If you want to read fiction, you call the Canadian Real Estate Association, who issues marketing stats for the benefit of their members. The British Columbia Real Estate Association, the Ontario Real Estate Association, the Realtors Association of Hamilton Burlington, my former home board for 3 generations of my family, the Real Estate Board of Greater Vancouver. These real estate boards, their sole responsibility is to serve their members to make commissions. Those real estate boards, it is illegal for those real estate boards to release a data point that financially could damage their members' income. It is illegal. The board, the CEOs would lose their job. They have employment contracts that have performance clauses in them. The Canadian Real Estate Association. If Raymond Borg, the new CEO after Simonson left Korea, was caught saying anything that would harm the financial earnings of their members, he would be fired. The board of directors, who are all realtors, would fire him. So, no, every single newspaper in Canada, from BNN to Bloomberg to Globe and Mail, every news station, from CBC to Global News to CTV, every real estate brokerage office or realtor or organized real estate trade association, they are all wrong. The average Canadian home was worth less in November of 2019 than it was in November of 2018. The only thing that increased was how wealthy the average buyer who purchased a home in the month of November from a member of the Canadian Real Estate Association was versus the buyer who purchased the year before.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, household debt has been reported as rising again. Concerns are being stated. How does household debt impact a housing market?
Okay, so first of all, my comments about household debt. Most of the commentary that your listeners will hear about household debt is nonsense. It just doesn't make any sense the way that they calculate it. When we measure debt, we look at the debt burden that a household has. So what I mean to say by that, Jim, is this. When I was selling a house to someone for the first time, I would sit down with them and I would do a profile of how much they were expected to be spending to own that home over the next 25 years. Now, most people move before the 25 years got up, but in the following sale, I would do it again. So they would be looking at what their aggregate cost of owning that home was going to be over 25 years. That's the debt burden that I felt when I was selling them a home. Now, I will tell you that most people, when confronted with that number, swallowed very hard because they didn't realize how much they were really going to have to pay when they purchased the home. Organized real estate is designed so that you don't look at that number because the professionalism, the experience, the knowledge, the skill that is required to sit someone down and explain it to them in a manner that they don't panic about, that they still will go out and purchase a home in the proper manner, it's way, way, way too hard. I mean, when I was selling homes back when I first started, you were selling a $120,000 townhouse to a young couple who were newly out of university, newly married, 23, 24 years old, $120,000 condo. I know all of your listeners are thinking, wow, that was a great deal. Those guys got into the market at the right time. Hogwash. They also saw how much mortgage interest they were going to have to pay over the next 25 years at the current mortgage rates. Now, we have a way of calculating the estimated interest cost over a 25-year period of time. It's a time-tested methodology. I can't tell you how we do it, but it still is a substantial number that people can rely upon. I'm selling people a $120,000 house, but then I'm saying, but you're going to have to pay the bank $200,000 in interest. What do you mean? I thought that was $120,000. No. That's the real estate number. The bank is going to be collecting 12% interest from you. Now, I can tell you the way that the mortgage rates work and the way that we can use to measure mortgage rates going forward. This is the actual number that you should budget for in the amount of interest that you're going to pay. Well, when I do those numbers today, Jim, they're just the reverse. I mean, if you purchase a house and you pay $200,000 less interest on the house, then we're not talking the same amount of debt, are we? People talk about household debt, mortgage debt, the same way that they talk about credit card debt, and it's two totally different things. You miss a credit card payment, and your interest rate goes from 7% to 30%. You miss a house payment or two house payments, and you just have to catch up. Your interest rate doesn't accelerate. CMHC has programs, and most of your listeners won't understand this. They have programs where if you get into arrears, CMHC will help you over a 6-month period or longer get out of that mess. Now, your mortgage had to be CMHC insured in order for them to do that, but these policies are all in the books. That's the main reason CMHC is such a low-risk option for the government. Because even if you lose your job, you've got 6 months that CMHC will help you get out of your ownership situation, if you so desire. If you want to go the foreclosure route and you can't recover those monies, that's your option too. Of course, in most of Canada, we are a full recourse province, so you can't just walk away from your debt. And I understand there's debt management people that are out there that are saying that's the truth. That's way. Yes, you can walk away, but that's going to come back to haunt you 7 or 8 or 9 years from now, contrary to what everyone is saying. Household debt in Canada is nothing like it's being discussed. You have to look at the entire cost of any money that you borrow. You can't just look at the amount of money that they give you. The interest component of mortgage debt or household debt is what kills families. It's not the principal portion. It's the interest portion that kills people. And it's what you have to stay away from. The only way you can stay away from it is if you have the calculation that tells you what your forecast mortgage interest is going to be over the next 25 years. Now, I can tell your listeners, it's not going to be declining interest rates for the next 25 years like people who purchased a home in 1990 experienced. They experienced continual renewals at lower interest rates. Best case scenario today is for the next 10 years, your interest rate stays low. But I will also tell you this. If interest rates stay low, your housing price will not increase. They increase as interest rates are falling, but they do not increase when interest rates are level. And if anyone questions me on that, I just remind you to go over and look at Japan. In earlier shows, we've talked about the interest rate trap, how the Bank of Canada, it is virtually impossible for them to raise interest rates without offsetting a recession. What we know is that interest rates must continue to fall for a housing market to sustain its current path. Stable interest rates do not allow a housing market to continue on its current path. Rates must fall. So, when you're reading comments about household debt and Canadian, please understand they're measuring debt totally different than how you as a consumer of debt interacts with. It makes no sense to us the way that they measure and comment on household debt. We can't do anything about the masses. We can only help the people that we're helping.
We'll have more with Ross Kay right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, the International Monetary Fund issued a report stating Canada ranked the worst on house price to income ratio over the 33 cities they track. Are we really that unaffordable?
IMF, hold on, Jim. Okay, so there we go. So I'm at the IMF.org website right now, External Research Housing Index. So let's see what the IMF has to say. First of all, I disagree with virtually everything Christine Legrand has said about the housing market in Canada. So I am not a globalist. I am a Canadian. I'm a Canadianist. I do not subscribe to Canada curing the world's problems until our own problems are taken care of at home first. Until the homeless people have a home in Canada, I do not worry about what we're doing around the globe. Until Canadians earn a higher level of income each week, I do not care what goes around the globe. My concern is for this great country of Canada and for the lifestyle this country is able to afford anyone who's lucky enough to live here. The IMF is a scam as far as I'm concerned, because when I look at their housing data, it's all bogus. It's all fake. Global Real House Price Index. They have a global real house price index that goes back, starts at 100 in 2002, I believe, and it's basically up to 160. It's hogwash. It's nonsense. It's organized real estate. You look at their, you look at who they use for data sources. The Federal Reserve. Well, then you've got to go and see where does the Federal Reserve use? Well, they use Korea. They use Internet National Bank for Canada. You can't use a housing metric from one part of the world to another, let alone using a housing metric in Canada itself. Real house prices over the past year. This group, where's Canada? This group has Canada in the first quarter of 2019 showing a positive year-over-year change. Well, guess where they get their information from? Organized real estate or Internet National Bank, okay? Housing prices, everyone knows. Housing prices on average in Canada were lower first quarter of 2019 versus 2018. It's irrefutable, but they're showing it as a positive. Real credit growth over the past year. Where does Canada rank on that one? We're about just a little bit over middle, but we are certainly in the top. When you look at the other countries, we certainly are in the top 20% of the world. Real credit growth in Canada has not changed that much. They're comparing ways of measuring debt that are totally different from country to country. Then we get to what you're talking about, Jim, house price to income ratio or house price to rent ratio. So let me debunk these once and for all in the air. House price to income. Canada is ranked the worst in the world. There are 33 cities. We are ranked the worst. They're ranking us at around, looks like 122 house price to income ratio is the ratio. And if you look at, let's look at, where's a good one to compare? Then it's Portugal, Netherlands, Ireland, Spain, New Zealand, Germany, Czech Republic, Luxembourg. These are all before the United States. Nonsense. You can't compare house price to income ratio. Now, what you can compare is spendable income to house price. You can make that calculation. But you also have to understand what the home ownership rate is in the country that you're measuring. So in Canada, we're hovering around 70%. So what that means is the bottom 30% income earners in the country, generally speaking, are going to be rental people. They're going to rent homes. They're going to rely on a real estate investor purchasing a home years before at a far substantially lower price, who's then able to rent that home out at a price below what it would cost to own it, because you purchased it years and years ago. So you've got to remove those bottom 30% of income earners, or the first quintile plus half of the next quintile, and you have to focus on the upper 3 quintiles of earnings. That's how we look at it anyways. So when we look at those 3 quintiles of earnings, that's where we start to measure it. Then we have to look at taxation rate in the different countries. Clearly, if you're in a country where you're taxed 10% higher, for the sake of the argument, than what Canadians pay, that means you have 10% less to spend on your house. Or Canadians have 10% more to spend in their house. Then you have to look at municipal taxes, provincial tax. Then you have to look at your hydro rates, natural gas rate. Then you have to look at your water bill, your sewer bills. Then you have to look at your healthcare system. Is it taxpayer funded? Is it private insurance? You have to take all of those things into consideration before you ever start to compare housing prices with income. They're trying to do something on a global scale that in Canada, we are the only people who do it on a local Canadian scale. This is why there's so much confusion over the mortgage qualification rate, B20, property taxes, income, homelessness, affordability. The reason why all these problems exist is because there's not a holistic view of what a family does or people do in their life. When you read something like house price to income ratio or house price to rent ratio around the world, you have to understand you can't use a comparable measure in any 2 cities in Canada, let alone 2 cities in 2 totally different countries. People say, we're talking to them, Jim, on silly metrics like this that make great headline news that the global elitists use to try to control what the Canadian decision makers will make. And we realize how absurd it is when we look at it this way. The hydro rate, just your electric bill in the province of Quebec is about 40% lower than what your hydro bill is in the province of Ontario. That means on that one single component alone, Quebecers have more money to spend in their house. Now, what is the average income of the top 70% earners in those 2 provinces? Substantially different. In Quebec, if you have kids, you have $1 a day daycare. In Ontario, you don't. So Quebec has more money to spend in their house than Ontario for the same income family. Now you've got to look at provincial tax rates. Oh, which province charges the highest amount of tax for your given level of income? Now we've got to look at municipal taxes. We know what's going out in Vancouver right now, all this talks of taxing. Well, guess what? You have the lowest property taxes in North America, next to New York City for new builds. Your listeners won't understand this. These places like the IMF, they're comparing house prices in Toronto and house prices in New York City. Yet they don't understand in New York City, if it's a new builders have a strategy to get around paying property taxes for 25 years. Okay, the state government in New York brought in a tax abatement strategy, a tax abatement policy. 3 years after it was brought in, builders changed what they called their homes to get around the policy. What it means now is people can buy a $3 million condo, brand new, in New York City and not have to pay any property taxes for 25 years versus the people in Toronto who are going to pay consistently higher property taxes over the next 25 years. None of these things show up in these charts. So when you see Canadians are spending 122, the ratio is 122%. The house price to income is 122%. The reason for that is Canadians have more spendable income, guaranteed spendable income, as long as they remain employed, than other countries do. We have healthcare. We have, if you live in Vancouver, you pay virtually no property tax. You have $1 million house in Vancouver, you only pay $2,500 a year in property tax. In Windsor, you own $1 million house, you pay $12,000 a year in property tax. In Calgary, it's $8,500. Imagine having an extra $6,000 a year in after-tax income by buying your house in Vancouver versus Calgary. Obviously, that's going to inflate Vancouver housing prices. Don't hear that being discussed by organized real estate, do you? You don't hear anyone in Vancouver recommending the property taxes increase, and because every single dollar that goes into a house will still go into that house. If it's $1 that has to be used for hydro, that's $1 less on the mortgage. If it's $1 that has to be paid to the municipal taxes, it's $1 less on the mortgage. There's no debating this. This is a black and white mathematical calculation. You know me, I love math. It's a black and white issue. House price to income ratios issued by the IMF, who then chastises the Canadian home buyer, is insulting. It defies logic, and it is something rooted in ignorance. Canadians should not listen to these globalists, these elitists. They should listen to generation after generation after generation of Canadians who has crafted their life around home, who have crafted lives of wealth. The current generation can be just as wealthy as the previous generation as long as they structure their home ownership life in a manner that reflects how the housing market is going to act over the next 25 years.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet or also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.